Hey, hello, this is Martin from Brokerage, the channel for learning about trading and investing. Welcome to Markets Next Day, the stock market analysis show, where we look at the charts and try to understand what happened in the market during the day and plan for a better trade for the next day. That's January 4th, Thursday, next expiry date 2024 tomorrow. If you're not subscribed, please subscribe and share to friends and colleagues so it reaches out to max. Thank you. So here's the wrap up. We'll come back to that once we look at the charts. We'll just see the plain simple charts to begin with. Look at this. It's a wide range bearish candle, and that's the second bearish day. That means retracement is happening from the top. We have been talking about this correction since quite some time, but the entire December month was breaking out multiple times, and now the correction has come in finally. Earlier also small correction came, but that ended up at less than 3%. This time also it is still less than 2%, 3% actually. Yeah, and in Nifty it's only 1.5%, and Banknifty it's probably 2.5% or something. Right, so it's still not there, but at least some kind of correction has come in, which gives a healthy rally. So that's where we are. There is also, we have note that the previous breakout happened from the same zone. So when the previous resistance acts as a support, there is a chance of a change in polarity bounce up that can happen. That's valid for Nifty and the Bank Nifty also. For here, for that, the previous breakout happened. One of the previous breakout happened from the 20 exponential moving average zone at 47,500 nearby zones, 47,400 nearby zones, and Nifty went very close to that today and then bounced up. It could continue or it could hover around the support zones and bounce. So change in priority can be possible at both. We also know that it's at the top of a trendline channel, and it was consolidating for a few days and then broke down. Clear consolidation of 3 days and broke down as seen if you look at the last 5 days. Same in Bank Nifty, there's a bearish pattern and evening star pattern was there, and confirmed that and then reconfirmed and then big breakdown yesterday. Right? Today was it was further breakdown and then a recovery. That's what happened. So intraday, if you see, this is what happened. Market in the Bank Nifty, it dipped and then it recovered almost all of that and then stayed flat. But in the Nifty, it did not recover. It had few corrections more because Bank Nifty had corrected yesterday. Nifty had not corrected yesterday. It did the bounce. Today, Bank Nifty did the bounce and Nifty corrected. That's what happened. Right, and intraday for Bank Nifty, if you see, it was trending down now, and Bank Nifty, it was trending down initially and then recovery that happened. So that's what we are. So let's just wrap up and see what more we can understand. So it's still about 21,550 in Nifty and 47,700 after losing the 48k in the Bank Nifty. Remember, we had made a rally of 26% on Bank Nifty and nearly 30% on Nifty. And even the last leg had 16% of rally. And today both closed negative. Flattish close on the Bank Nifty, forming a red hammer. Hammer is confirmed to be further bearishness if it is going below the low of the hammer. The low of today's close. Today's low of today's candle, basically on the Bank Nifty. And it's a bearish, wide range bearish pattern. We are seeing that on the Nifty, which is anyway bearish. So both seems to be negative overall, but a flat close on the Nifty and a rather deeper cut, more than 0.5%, 148 points on the in the case of Nifty. Flat close on Bank Nifty. I'm sorry if I said it wrong. So intraday, we know what is it. Fyers, today's data has not come in, but they were buying big yesterday, and everyone thought that they may have been the culprit for selling, but it was the DAs who were the DAs who were selling big and profit booking yesterday, not the Fyers. Today's data has not come in, so looking at today's upcome, somebody had brought it. So mostly it might have Fyers who might have helped the Bank Nifty to come in, but big selling has happened from either of these Fyers or DAs. Certainly is there. So that's it. Resistance support levels we are not seeing. Let's just go back quickly on the chart. I'm saying so. The first resistance on the upside would be to move above the 48k, which is a rounding number, which is test lost. After that 48, 600 would be the zone for the all-time high, and then clearing that 620 30 all-time high would be the resistance, and after that 49k would be the next resistance zone. Downside support would come in at 47,400. Tomorrow is an expiry day. Markets can be volatile. It can go further down also. If it breaks it, first support would be coming in at 47,500. It's a rounding number. So the support can come in. That means it might have breached the previous that hammer's low. So that means it can turn even more bearish. So it may find some support at 47,378, which is 20 exponential moving average. If it do not find that, it can go to up to 47,000. Well, a confluence of Fibonacci extension and the retracement of so that confluence support is there, and also it's a big rounding numbers. 47k can give good support tomorrow. It may not go. It may try to find support either at the 2400 range or the 2500. 2400, 500 may be the place where it's expiring tomorrow. It may be trying to find. We're talking about Bank. We're talking about Nifty, right? So yeah. So Banknifty may be we are talking about Banknifty earlier, right? Not 20. 47,000. 47,000. Sorry if there was any confusion. I'll repeat that once again. Apologies for that. So for the Nifty, right, tomorrow the first gap support will come in near 25,500. It's 21,477. If that is breached, then 21,257. That's the 20 expression moving average. Other supports can come in. So if that is breached, then you have the rounding number of 21,000. 21,000 is the worst case scenario, but it may not go till that because today market managed to close at 21,500. You may try to find the support worst case at 21,257. So exponential moving average support is crucial tomorrow. If that, no, that's what. On the upside, the 21,834 what time would be the first resistance, and after that 21,922k would be the resistance on the upside. So downside, right, from 21,500, if that 500 support is breached, then you have trouble. That gap also will be closed. Look at our gap, 21,477. If that's closed, then it take support only at 21,250. So that's Banknifty. We already said, and so 47,000 is the worst case scenario, but it may find support at 47,400 and 47,500 because it's 20 exponential moving average and around low of the today's candle. So if 47,500 is lost, then we have trouble, right? So coming back to the wrap up, so India is actually cool off. It's going against every time market moves up. It is supposed to cool off, but it does not cool off and spikes. When the market is falling down, it is supposed to spike up. Now it is cooling off. So it's quite strange behavior, but it may be an indicator that this today's fall may not sustain, and it may take a support and consolidate rather than continuation of the breakdown for tomorrow. That's what it indicates probably. But otherwise, it is not cooling off that much, even when the market was rising up. There is a fear of heights, and it is probably that fear of heights had cooled off a little bit after the market is retraced a little bit. Only bars is showing beginning of consolidation in Nifty and actual consolidation on Banknifty. So it's sideways indicative. And momentum actually is bullish on the Nifty. It maintains bullishness, and the bearish divergence has come. Still have some more downfall can be there in the momentum towards the RSI 40 or RSI 60. Banknifty it is completed and it has slipped slightly to the negative zones, not negative, sideways zones. Slipped on the bullish to the sideways zones. So let us see whether you will have a bullish divergence formed here and then bounce up from here or not. But yeah, that's what the momentum is there. Trend has also slipped across top in the case of Banknifty. So Banknifty, the trend and the momentum has slightly gone to the negative zone. So if it sustains tomorrow, we have trouble. So if it recovers quickly tomorrow, no problems. So there is momentum slip. Be aware of that, right? So anything will happen. So tomorrow is going to be very crucial. So it can take a support from this place and then bounce up, or it can begin the real breakdown, real retracement of 5% or something, more than 3% at least. What happened before the last breakout. So very critical. So everything is we cannot just say anything from today's. Of course, the momentum was dipped and the trend has dipped on Banknifty. Banknifty is more weaker. It's very close to a very crucial support zone on the top, anything would happen. So because look at this heavyweights all closed out today, except reality FMCG flat form, which is kind of flattish green. And all the sectors are in bullish mode except IT, which slipped into this. Still yesterday, all were in bullish mode. Now IT has slipped into the sideways mode. Now, industry heavyweights are root maximum. If you see, it is all closed at today, except the ICICI Bank Kodak just slight flattish green. Now, if you look at the moment of the daily charts, HDFC Reliance, except that, right, all are in sideways now. So suddenly, the heavyweights contribute maximum, have turned sideways from bullishness. Whether that sideways it will remain sideways tomorrow is the question. That's why it's crucial. So across the indices sectors, across the heavyweights that contribute maximum to the index, we have trouble that has began. So tomorrow is very crucial. Although it's a weekly expiry, it's going to be very crucial with regard to how far the retracement can go. US index is also showing some retracement, especially on Nasdaq and SPX. So Dow Jones also is showing some red at the top. So remember it had broken out and made no all-time highs, just like our market did. Actually, our market followed the US markets when the inflation cooled off and then slowly began. Yeah, so that is something to be aware of. The mother market is also seem to show some pause, right? And dollar is spiking up. Fees becoming even more weaker. Crude oil is also spiking up following the shipping price after it had dipped substantially. And gold is attempting to move, but it's consolidating and then falling, showing some red after hitting the all-time high and then unable to climb up once again, although it did try last week. So momentum investing could be done if there is another breakout that's happening from here, a bounce up, CIB bounce, something happen, then value investing will be, this may be the opportunity when price, when there are dips happening, that maybe try to buy and invest in quality stocks in the SIP mode, small lump sums. As a trader, the direction is very clear, absolutely, direction is up moon. Although there is some retracement that's quite natural that may come in any time. It was pending, it was due, and it has happened now. And we don't know how far it may go. But this is not fair for the vertical moves that has happened. More is due and more could come, is what I think. So direction is clear. Play shift to direction strat. Continue with the direction trading strategies with probably some spreads, but non-directional strategies. Still, so you need to get the signal that the charts has to go completely to the sideways. So Nifty, the sideways momentum is not completely going to the sideways. Still, slight expansion, slight bullishness is still left in the Bollinger Band. So once that is confirmed, we can go back. And as far as the implied volatility and realized volatility, it's still slightly in favor of the option sellers. The percentile IV also is at very high, so some call-off benefits can come in, and so still in favor of the option sellers that way also. VIX has not spiked above 15 in the last couple of days, so it's that way also it's okay, right, for the option selling point of view. But you have to be very cautious. The direction is very clear. It's trending and it's not sideways yet completely, right? So wait for that. Until then, option selling has to be, has to be done properly, concerning what amount of volatility is there, right? So volatility is going out of hands, so you have to cut short the positions as you manage the risk and stay alive. Now tomorrow's weekly expiry, as I said, it's going to be very crucial with respect to the index and markets overall. But at the same time, it's also going to be a very wide range of open interest. Accordingly, is showing big players are betting 21,500 as the maximum support, and 22,000 is a wide range on the upside where the highest call writing is seen. So put writing is in at 21,500, but support is seen 22,000 is very far. There is not likely to shoot up to that, but that's where bets are seen as of one day before the weekly expiry. So, but the market is not bullish on the put call ratio prospect in the option. So I levels is showing a very wide range, with this put call ratio that is negative, and short build-up is what happened in the futures operator. So anyway, 21,500 as we had already seen good support zone. That is breeze only 21,250 will be good support where the expansion moving average. So that we'll have to play out. Worst case scenario 21k. I can find a confluence of supports there, right? That's all I have. So if you don't subscribe, please subscribe, share with friends and colleagues, and manage your risk and play it safe. Right? Market direction is clear. There is some retracement that's happening. So how far it will go, you have to keep it. But there is also a possibility that it can bounce up. So play it safe. That's what I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye.